I'm Keith McCullough, and welcome back. So this is round 3. Today what we tried to do, we do have a plan, we have a process and a plan. So we did USA with one of the world's best, Liz Ann Saunders first. Then we did Lacaille. I think he's the world's best on Europe. And now we're going to do China with an Irish guy.
Of course. Makes perfect sense.
Brendan, welcome. First time on Hedgeye TV?
I'm feel like a sports radio, long time listener, first time caller. Thanks for having me.
And it's also I think it may be one of the first ones we've done live since the pandemic.
Oh, okay.
Yeah, so thanks for tolerating me. That also means for all of you that most people don't want to actually stand beside me. It's just like, I don't know. I guess he's going to put up with me for the next little while. But what I wanted to do was get into, we have our view on China, which is just a quantitative, macro-oriented view, which I want to go through and ask you questions on. But I am deeply interested in how you express China, all the different ways to express China, because most people, they don't know. I mean, I don't know, so hopefully I'm gonna learn something.
Yeah.
But let's just start on that. Is that a general statement people will make to you? Okay, what do I do?
Yeah. I mean, just to reference one of the slides, slide 5. One of the interesting things is in 2021, you had the onshore China market. So Shanghai, Shenzhen, stock exchanges taken together, second largest stock market in the world. It's 95% owned by investors in China. So this onshore China, it's what do the Chinese think about China? Okay. And in, say, just using 2021 as example, Shanghai goes up 10%, Shenzhen up 12.5%. And compare that to offshore China. So offshore China would be the Hong Kong market, the Hang Seng Index, or the US listed China ADRs. In 2021, Hang Seng's down 13. Hang Seng Tech is down 32, and the internet names were down 49. So you could say to someone how was year 2021 investing in China? Well, I was up 10%, and then someone else would be like, I was down 50. What happened? What's going on? And so this onshore versus offshore dynamic, it's what do the Chinese think about China? And for us, that's KBA is our ETF. And then contrast that with what do foreigners think about? Because that's the offshore market, and that's kind of more of a K-Web. And those two are totally different markets, totally different.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content. That's for me in particular for our audience, because every morning, God willing, 2 feet on the floor, and I'm Irish too. And I'll be this morning I'm okay, I write it down. China up 1.5%, Hang Seng down 0.8%.
Exactly.
Divergence. So we'll say, okay, there's a divergence there's something's going on, there's something that's different. That is quite common.
Yes.
Right? And it is quite common that people paint, particularly Americans, panic-stricken hedge fund managers, whoever it is, they got rolled in a lot of that, anything on delisting risk, a lot of risk last year.
Yeah.
They sit there and they say, I don't get it, so I'm not going to touch it. But every time China goes back into a bull market, they're going to buy K-Web.
Yeah. I mean, 100%. That you want to own these internet giants because our simple minds Alibaba's like Amazon, Badu's like Google, right? And
are they? I think that our analysts would say, yeah.
Yeah,
close enough.
I think Felix, you could make the argument that at first these were clones or cannibals. Now they're way ahead, right? Elon Musk was tweeting about it. There's no WeChat, right? So Tencent, this super app where you can run your life on this one app from Tencent, or compare that to Alibaba, 1 billion users, right? Can't buy the stock, right? Because it's not listed in China, but that's coming. They're going to allow that hopefully in a few months.
Now, and I want to come back to that, but guys, if you can pop up the quads on slide 20. I'm just going to give you the setup in terms of what we have, and then we can kind of back into it. But on this, so if you just look at China and on the quads, so the shit hit the fan economically everywhere, but so the way to read this is red and yellow are bad because it's either stagflation yellow, red is quad 4, which everybody knows is bad. So China entered it first. Many would say that it's because they had it first in terms of COVID, and then they just went through this long slog. Now we're in the forward outlook. We have a 2, 3, 1, which is obviously different. We have the USA in 4 straight 4s. We have Europe in 3 straight 4s. There's a divergence there that every day I just wait for and I did it once this year. You saw, because we have some impact on ETFs, but I mean, it's like the first place I want to buy is China, just based on the model, right? Because it goes from slowing to accelerating. One answer is yes, they will accelerate. 2 is no, because the secular issues are going to trump the easiness of the quads or the easy comps. How do you think that could play out that way with any 2 or 1 in the future?
Oh yeah. I mean, I think China right now. We've got this Party Congress coming up.
Is it this week or next week?
It kicks off Sunday. So on slide 6, we show a little bit. So what you have to remember in China, like the only thing that matters is stability. That's job one for the government. And going into this year, you've got a twice-a-decade event where you've got a potentially major leadership change. And that's because China has an implied retirement age of 68 for government heads. So that's why Xi, everyone's talking about Xi needing a 3rd term. It's because he's, coming of age, where he should be retiring. What's key is the team below him is a lot of those people are going to retire. And this year, it's all been, the only thing people in the government have been concerned about is making sure that they're part of those next 5 years. So they're all, trying to jockey for a position. They want to fill those seats. And so you'd say that's, but what about COVID or the economy? This doesn't matter. Like, it just doesn't, everything is back burnered until next weekend.
And then they announce, here's my new team. Is that how it goes?
Yeah. I mean,
here's the plan.
Literally on the 22nd of October, 7, probably all men, just based on who's underneath, who's going to.
There's never been a woman in, no?
Not, they're a very egalitarian society. Women have a much lower retirement age, which is most women are supposed to retire in their 50s.
Really?
So a lot of, unfortunately, in the government perspective, a lot of women, they just have retired by the time they would be in these senior levels. But no, literally 7 guys are going to walk out on the 27th of October, and people are going to be like, oh my God, the Vice Premier Liu He, probably retired, isn't going to be one of the 7. Premier Li, the number 2, we just don't know.
Oh, interesting.
And so they're literally going to walk out, and why I think your quads, the forward-looking quads, are interesting is because there's some of this malaise, these issues we've been dealing with, zero COVID, all these, the economy, it's all been on the back burner. October 23rd, it's back to business. Now we shouldn't expect them to rip the Band-Aid on a zero COVID policy or jump-starting domestic consumption, but the trajectory is starting to happen, and I think that's what your process is picking up on, is this change. It's gonna happen.
Well, if I'm them, or I'm a company, and I'm about to launch with my new management team, I want to start from the bottom. Yeah. So this is almost like it's not like the Chinese don't think about this. I mean, if I want to kitchen sink it, if we go into this period, by the way, these 2s are very narrow 2s. I end up with 4 straight stagflation 3s. I basically have 2 years of economic growth decel. Never in the history of the quads, going back, and Brazil did it once. They had 8 quarters in a row of negative. And they had political issues. They had, they had a currency though that was down in a ball of fire. These guys don't, or they're protecting against that. I don't want to get into it. But every time you shut it down, I don't believe the numbers personally. If there are only 11 people in this city that have COVID, 11? Is it 11 or is it 1,100? Well, it doesn't matter.
Yeah.
You're basically saying nobody's going to have this. We're shutting it down. So the definition of a sine curve being on the bottom is when you lock everyone in their house. I mean, it's the comparisons by the time we get to this, actually in the second quarter of next year, are going to be extremely easy for China. So. Yes. That's why I'm so interested in it. Why wouldn't they reopen? Is this now a cultural and a leadership perspective, or was it of the 5-year look back, or is it the kitchen sink? Like, why would you shut everything down? Like,
it's from an outsider's perspective, where we're like in person and you're like, what's going on? But the elderly in China have lower levels of vaccination. So China has high levels of vaccination, but amongst the elderly, there's been a lot of skepticism about modern medicine, and therefore you apply a less lethal variant like Omicron. You apply that lethality rate to a population of 1.4 billion people, and 10% is not fully vaccinated and is elderly. You're talking about millions of people dying. Now that's why in China, like, we call it zero COVID. In China, they call it lives first.
Is that what they call it?
Yeah. That, like, they've saved.
Just a different spin.
Well, it's China. Everyone's got opinions, right? But it's that lives first, and then culturally, like in China, you take care of your elders. That you're responsible for your parents and your grandparents, and so you can't wipe out the people you're taking care of. Now I think what's key is you're seeing this trajectory of zero COVID come down, where Hong Kong opening up, inbound, outbound, like no quarantine. Hong Kong's been averaging 5,000 to 10,000 new COVID cases for months, no lockdown. And why? Well, because when you lock down Shanghai, you're affecting 25% of GDP because nobody can get to the port. And so I think since then you're seeing like the economic consequence of an outright lockdown. We just can't take it. And I think something that's probably showing up in your quads is the consumer, that if you're afraid you might get locked down, and you're not seeing whole cities locked down, but if someone in your apartment tests positive, like that apartment building is being shut down, you're going to hoard cash and not spend it. And so you combine that with one of the other issues, which is slowing housing. You have a really weighing on consumption. And so the two big things I think you'll see in Q4 through Q1, pro-consumption policy and a lot more support for housing. Because you got to raise domestic consumption. Why? Because when the U.S. goes into Quad 4, that means less demand from the world's factory. So Chinese exports are going to slow. How do they offset that weakness? It's got to be domestic consumption.
This is the macro show. This is pregame, okay? We're trying to play the game that's in front of us today, trying to give you all the content so that you can see that there are many tools in the toolbox to play at the highest level. Leadership matters at Hedgeye, so again, being transparent, accountable, and trustworthy people. This is a game about playing and weighing probabilities. It's not about picking stocks. It's about picking the right portfolio. Execute across everything. Don't get distracted by the MSM and the tourists. They're very dangerous. I will grind and execute for you with our people and with you. Well, I was looking at it. I was actually, ironically, I was looking for my China model in that slide deck. I couldn't find it fast enough. But it's there. It's somewhere here. There's something that goes behind this.
It's a big pitch book. It's a big deck.
But the one thing we've given multiple presentations on, the thing that every FOMO-driven American U.S. equity-only investor wants, or like I always say, panic-stricken hedge fund, it lives in fear of, short squeezes, is cowbell. China's already provided ample cowbell and seems to be ready to do on housing or on many initiatives a lot of what it takes. Why is it that the world hasn't, I don't know if you know the answer to this, but I mean, why isn't that cowbell isn't considered such a bullish catalyst? Because if we're looking at it for everywhere else, it's staring you in the face.
Oh, I mean, to me, and we actually, let me try to find this for you on slide 23. It's like the whole world is tightening, China's easing.
100%, yeah.
And so what, this is where you've seen monetary easing. The renminbi's weakened a bit, versus the dollar. So I think that's why you're seeing it's kind of interesting. PBOC, a lot of rumors overnight that they're going to come back in. I mean, obviously a lot of people are intervening in their currency, but this is where they came in, about a week ago, around that 718, 717. So there's some chatter that they were kind of circling last night.
Well, they should be. I mean, they got a big meeting coming up on the 23rd.
Well, you don't want to, it's a no bad news week, right?
Right. Coming out of the holiday.
You're coming out of Golden Week, heading into the most important political meeting in a decade. Like, no bad news, right? So, it's interesting, and that Shanghai Shenzhen was down about 2.5, and right around 1 o'clock,
voila.
Like,
voila.
Whoa, what happened? And it was, hey, some chatter, like maybe PBOC's coming into CNA, coming into the currency.
No, if you think, or if you understand, how it works, the plunge protection team in the USA, China's, it's just not even trying to pretend it's not there. It's obviously there.
Yeah. What's interesting about today's rally was, if you think about Shanghai mega cap, large cap value stocks,
right.
Shenzhen private companies, more growth. So where the national team in China, they call it, these big sovereign wealth fund, insurance funds that come in and buy low, they know they can move, if you move Shanghai more than Shenzhen. You move Shanghai because it influences the indices more.
Well, it's Felix this morning, first thing he said on the call, oh, thank God they defended the 3,000 line. He's like, he's like, Keith, it's gonna sound stupid to you because it's a round number because I hate round numbers. But he's like, to them, it mattered.
Oh yeah.
Yeah. So there was that too.
100%. It's a bad media headline that the big national, their S&P 500 is breaking the 3,000. It's just a big round stupid number.
But it is. So in this world, like, you just want to lose less.
Yeah.
So if you're the one way to lose less, would be if the central bank comes in and buys the stock market every day. Japanese government bonds haven't gone down in many, many years for this very, very, very reason. So if you're committed, so to me the bull case is they comp the comps. Well, everybody hates China. They comp the comps, and again, we have monetary stimulus already in play. That's just like 3 things. I know there are many more things. The bears, though, like why people are so bearish, and I'm not going to name names. Like, we're talking about, like, I'm pretty bearish on the U.S. This is next level bearish.
Oh yeah.
Like when I do meetings, if I start talking about this, there's 2 ways an institutional investor goes. If it's a big institution in Boston, they're like, tell me more, because it's the biggest part of their EM.
Yeah, exactly.
We'll get into that. But they always want to know. It's an objective decision because they have to have a view in China. They already have a position.
Yeah.
Hedge fund, ABC, this is going bad forever.
Yeah.
The dark, deep. What do you say about that?
Yeah. So, one,
because people have done a lot of work on that darkness.
Yeah. I'm an optimist by name, but I think on slide 10, China is very different than Russia. It rolls off the lips, but Russia is
what, in terms of bad guys?
Just in terms of their economic influence in the world.
Oh, massive difference.
Where Russia is a rounding error. But China, you're talking about the second largest economy in the world, you're talking about almost 20. And I think what's missed is how intertwined these worlds are. And so on the next slide, on 11, if you're really worried about China, here's your sell list. Because U.S. multinationals have done nothing but kick butt in orientating themselves to China's growing urban middle class. And so, I think people are shocked that the irony of some of the semiconductor policies is you're actually killing the U.S. companies that are doing so well selling chips to Chinese automakers and electronic makers. The one real ironic one is ExxonMobil. Building a multi-billion-dollar petrochemical plant. A lot of U.S. LNG is coming out of the port of Port Charles down in Louisiana and heading off to China. They love U.S. farm goods, and these economies are much more intertwined than I think people kind of say. They say oh, we're going to decouple. Well, listen, I'm telling you, those factories are in China because there's 4 billion people in Asia. Where are you going to put a factory? You're going to put it near where there's the 4 billion people, right? You
But this is why people want to make, that's the darkness. It's us versus them.
Yeah.
They're bad, we're good. I mean, I'm just boiling it down. I mean, and then if you believe in that narrative, you want to believe. But the fact of the matter is, it's like going to high school. It's like we're all in the same high school.
Right.
You want to say those are the bad guys and those are the good guys. Everything's together.
Right.
I mean, these numbers are actually, if anything, they validate why I'm right now currently that the world is in Quad 4, right? China's still slowing or not accelerating enough.
Yeah.
Because these indexes in terms of percentage of revenue from China are gargantuan. Now, there's some parts, like literally the FANG has 51% of its revenues international, 25% from Europe, and here's the revenue from Qualcomm, 66. So it's an interesting thing, like when you try to decide, like, well, what are you going to buy?
Oh, yeah. Yeah, I mean, you have implied, I mean, you meet these people who are like, oh, I'm going to buy EMX China, and they're like, hey.
EMX China?
Like, yeah, I mean, we've got, KEMX, fine, no problem, but
KEMX is your EMX China.
Yeah. And where there's some interesting things you can do between the rest of the world and the EM. But it's one, I would say, like, listen, you have implied China exposure. It's not just because you own one of these and I love it when people are like, oh, rare earth processing. The Chinese do all the rare earth. Like, well, do you see the environmental consequence? It's like the Canadian oil sands. Like, you want to turn your backyard into the lunar. You're never going to do that here.
No.
And there's 100 million Chinese are employed in manufacturing. The U.S. labor force is 120 million, and we're at full employment. Every American would have to go work in the equivalent of a Chinese factory. Not, just these things just don't,
Why use the numbers when making an argument?
It's because you want to look over here, Keith. Don't look in the mirror when you can look over here.
To be clear, I mean, for me, that's the whole point of this. By the way, guys, show slide 23, which will make Brendan's point on KEMX. I mean, I could do that. Last year we were long Indonesia, now we're out of Indonesia. I could buy Singapore, I could buy whatever I want to buy. That's not EM. But even on this metric, Brendan, you have, so this is our GIP model for all of EM, right? A lot of EM's got a lot of red, and that's the point. Am I really going to go to Russia? Russia's got a couple ones. No, you can't. Actually, they delisted the frickin' RSX after we shorted it.
Crazy.
You do have this really interesting thing where at a base pack level, I think what's going to happen here is you enter a global Quad 4 recession, dollar gets even stronger. These EM currencies that float are going to they're already collapsing. So one position to take is obviously a neutral position where you're long China and short X EM, where I have my Quad 4s 3 in a row. So that's one thing that I try to coach people through is if you're just playing the quads, so it's just like blackjack, we're just playing the rules, we don't hit on a 6, we don't buy 4s. Right? So if anything that literally could be anything, I would buy anything. Everybody knows that. I would sell anything other than my mother. There's literally, it's an interesting setup. Now, just one more point on it. What would somebody say back, there's some very negative China bears that are going to be negative until the end of the time because that's their branding. Right? Is there anything in coming out of the 23rd meeting, or assuming Xi's very well aware of the bear case on China and he wants to paint something against it, is there something that can be, is there anything different? Anything? The guy hasn't even traveled.
I mean, what's interesting is he just traveled because they had one of the kind of pre-meetings a few weeks, and so he left. It just shows he left the country first time because it's this jockeying. So
if you want to make people less scared about what you may be doing in the darkness of it all, And he used to live in a cave. Correct me if I'm wrong.
Well, I mean, his family was on the wrong side of a purge.
Dude lived in a cave. If you are scared of something, just don't communicate. If they don't communicate, then I can believe anything.
Right.
But if he were to just get his ass on some planes and start to if we are intertwined, why isn't he?
Well, I think it's interesting. At the big UN meetings a few weeks ago, it's interesting that the senior foreign affairs minister met with Blinken, And they said that the news was like this was about Taiwan and broader relations, but some of the inside baseball is like this was more about like, hey, like we got through this, like we're economies are intertwined, and maybe there's we got to get through the U.S. midterm elections where they're going to throw everything but the kitchen sink at China, but you get through that and you're like like if you hurt China's economy, you just hurt the U.S. economy. I just kind of say like, look what's happening with Boeing. Boeing is losing to Airbus in China, and if Boeing loses the China aviation opportunity, it's a big problem for that company.
Yeah.
Big mess.
Yeah,
so,
I mean,
so hopefully things like business people are getting along just great, right? Hopefully the politicians can kind of do their job and figure it out.
Now, my job too is to tie this back to making some money, obviously, which is I just tried at the headline level. I think it's a real interesting slide that you have on slide 3, as we would. So I have Ryan Ritchie's like my cadet on this, and he'll dig in onto. I'm like, what's this one? What's that one? Because what I'm really doing is anything that signals, I'll buy it. And as much as I said I'd sell anything other than my mother, I'll buy anything. And so, and because I ping you on some of these things, I'm like, what's that one?
Yeah.
Like for example, which is not on the page. Which KMLM.
Yeah.
I'm like, why is that? What is that? What is, first of all, before we go through these, what is KMLM and why does that thing not go down?
So Mount Lucas has been a managed futures, a CTA, for decades.
Okay.
Spun out of Commodities Corp, which is one of the branches of all hedge funds. Paul Tudor Jones came out of there. So this firm's been very focused on. And they actually had a client who's like, listen, like to trade futures, you need like an ISDA and CTA, all this regulatory mumbo jumbo, and they're like, yeah, we got a client that wants our strategy but isn't allowed to buy futures. And one of my colleague Bill had a relationship with them, and they're like, yeah, like why don't we'll launch it for you. And
they run it.
And they run it, they use our SEC. I mean, our independent board had to do due diligence, and they run it. So doesn't include equity futures, but they've been, they've like your UUP, they've been long dollar versus every currency.
Awesome. And
short treasuries.
I was talking,
globally.
Mike Green, right?
Yeah.
Obviously from Simplify. And so I'm long CTA.
Yeah.
It's the same strategy, right? It's a CTA.
Yeah.
And actually, CTAs, one of my good friends, Gordon Nicholson, who's a big allocator, he was saying this to me at a hockey tournament, of course, where I get all my intel. He's weekends, I'm kind of a loser, that's all I do. But he's like, look, man. Gordon's like, look, dude. I'm not going to say what he said about other strategies, but CTAs, you have to actually know how to be rules-based, and they don't have to have all these great intellectual thoughts on how the end of China is coming, or how your great valuation model on a profitless tech company was going to work.
Right.
You just trade the market.
Yeah.
That's what CTAs do.
It's just a methodology you adhere to, right?
Right.
And you're not emotional.
You're finding what I love about the game right now. Like I've found 10 ETFs that I'm currently long, and I really don't care if I'm long CTA, UUP, corn, whatever. If any of these things, back to slide 3, signals buy, I will buy it.
Yeah.
Unless you're some KGB agent that manufactured these. That's why we've done our due diligence on you. It's like unless the manufacturer, and by the way, there are a lot of shitty manufacturers of ETFs.
Yeah.
Like this, I would never name names, but the Roro tactical ETF. Come on, these things have no money in it, therefore they're just going to go away. A lot of ETFs go away. Yeah. But of these ETFs, like what away from KWEB and KBA, what do you get the most questions on?
We actually did the first electric vehicle ETF globally, cars, that we were in Beijing back in 2017.
Cars on here? Oh yeah, KRS.
And after doing meetings all day in Beijing, we were going to go to this luxury mall, and first we went by an Apple store. It was packed. I was like, okay, that's good for Apple. And then came upon a Tesla dealer. This is July 2017. I think Tesla's stock was at $50. And ultimately, we kind of said, what's really interesting is Tesla might fail in the U.S. Like back in 2017, this was where everyone was short Tesla, and there was like, they might fail in the U.S., but they can not only succeed, but they can crush it in China. Because the pollution situation in Beijing in particular had gotten so bad that people were like angry. So the government put through their cash for clunkers, and they're like, listen, you buy an EV, we're gonna like no sales tax. Like we're gonna incentivize. So then it was like, well, this is true for Tesla, but it's a global phenomenon. And so we own the NIOs and Li Autos, but we own some of the commodity players who will benefit. Some of the lithium, copper. So it's an interesting fund. I think it's a very well constructed fund too. We actually use Bloomberg analysis to determine the holdings.
Yeah. Actually, let's get into that in a second, because in terms of, actually, just do it right now, because I'm going to ask you about KRBN next, because that's what I get the most questions on. For those of you that don't know, that's the global, it's very successful. I mean, global carbon strategy ETF, and I've been in and out of that, as Hedgeye Nation knows. But on the selection and the construction, how particularly important is that relative to some of the dog shit ETFs that I see?
Yeah, I mean, I think my background is more in the passive investment space, and that's like a cry for help.
Yeah.
But you really do got to pop the hood on these things and really investigate what do you own. And I think a lot of times people look at something, they look at the name, and they'll just be like, oh, well, that's what it's going to do.
Right. And well, that's the lure, right?
I mean, this is a marketing scheme to suck you in and remove you from your money.
Which is no different than actively managed mutual funds. It's a growth fund.
It's the same people from that, are just applying it over here. So there's due diligence you got to do, and it's kind of like this onshore versus offshore China thing. My China was up 10%, you were down 50%. You have to do the work, and that's something that obviously you're an evangelist that this is a process, you got to apply it, and even with ETFs where the granddaddy SPY, right? SPY is a UIT, which means they actually can't reinvest the cash, the dividends, when they come from the stocks. They pay it out quarterly, but it just sits in cash. So if I have like a 1,000-year time horizon, SPY will probably underperform because of this minute cash drag. And you'd be like, who cares? I'll just buy IVV or VOO. It's fine, but there's a difference, and you got to do the work.
I like that. That's good. That's good for people to know. If you think of this list, and the thing that I'm always trying to find, and we have given life to, if I think of the Tacrium ETFs, corn, wheat, trivial, things. There's one thing, and that's the ETF. There's a time for everything.
Yeah.
So when you come out of a bubble and it crashes, implodes down on the rocks, you typically come out of that bubble into a bull market that nobody really foresaw. There's a lot of parts of EM, China included obviously, where that could be the spot.
Yeah.
Commodities, there are a lot of different, but when you think of the big stuff, it would be hard not to think that through.
Yeah.
Of the new ETF strategies that you have, what one isn't super popular yet that you've introduced that you think is most interesting?
Yeah, I mean,
are you allowed to pick one of these as children, or are you
Well, I kind of these are like my kids. I love them all.
Yeah, right.
But I would say, we should hook you up with Luke Oliver, our colleague, who's the grand poobah of carbon credit allowance investing.
Because that's a huge thing, right? And it's relatively new. And it looked like it wanted to go on a bull run. It looked like gold did earlier in the year, and then
Europe,
everything.
Yeah, I mean, when Europe, on the precipice of what's happened, terrible events in Ukraine, right? Really weighed on that. But similar vein, we actually hired a fellow Canadian, Roger Mortimer, worked for Capital Group.
Okay.
And he's looking at old school, discarded energy material names. KGHG.
A lot of our clients really are interested in that.
So this, yeah, Roger's more of like looking at these companies that are actually transforming themselves. And he's a stock picker. And so, he's covered these names, for almost 30 years. And, he's finding these little nuggets that, the ESG crowd would never own because it's like, oh, that's Fortescue Metal or BHP. But, within these companies, there's some really interesting things happening. And because of the regulatory environment in Europe, which is true for carbon credit allowance investing, but also for these companies where the regulatory being forced to change. That's these catalysts. So Roger's really focused, and then in certain areas in the U.S., like you can find similar type of companies.
Well, there's a great example of something that you can already see the wave turning on ESG. Yeah. Actually, in the last couple of weeks, it's probably been at its loudest point where it's almost like shaming people. So no, but we're starting to say, okay, well, what about the proxies? Why can the state of California not invest in this? Like, why are we precluding people from investing in Chevron?
Yeah.
It's
based in Santa Rosa, California, no less. As an FYI.
Just FYI. Okay, cool. Well, let's, if you don't mind, I'm going to take some of everyone else's questions here. It's a good question here. Because we're short Taiwan fully, full disclosure, we're short EWT. Mm-hmm. It's been a great short. Again, if you look on the board, you go to Taiwan and it's like 444. If I see 444 and I see a signal that says sell, I will sell it. That's about as simple. That said, everybody's like, this situation, that's a way to play. I was short Russia before the incursion. I had no idea. Mm-hmm. I don't know Putin.
Yeah.
Thank God. But it's like, but Russia had force.
He's not been at the hockey rink?
No, he's not. No. And if there are Russians at a hockey rink, it's generally not a good thing for our relationship. Like we generally, actually I do have one U.S.-based Russian on my team who's great, but if we're playing against Russians, there'll be some fights, and, some guys, some cross checks and all that stuff. But Brendan, how do you risk manage, this is from Rich, Brendan, how do you risk manage this Taiwan situation? Do you see an outcome where they're not invaded? I know you're not a geopolitical strategist on this, but I'm sure you have an opinion.
Well, I think, it's a tough one because, what's funny to me about all this talk about Taiwan is like, no one's like looked at the history of like, why, when the British were trying to sell opium to the Chinese and the Chinese emperor said, I don't want my entire population as drug addicts. Seems
just reasonable. A little bit of history there.
So this is the 1860s, and the British invaded China, right? The Opium Wars, and they took Hong Kong. The Portuguese took Macau, and then other foreign powers went and invaded China, including the United States. And that's where when you go to Shanghai, you've got the Bund, which is the part the Germans took over, and the French concession is where all the expats live because the French took that, and even the United States went and took a piece of Shanghai because the Chinese were weak coming in. Out of the Opium War, the Japanese saw they went through the Meiji restoration. They were like, we got to modernize, or what happened to China is going to happen to us. Mm. So they get blown up militarily. First they invade Korea, go into Manchuria. This is kind of the events leading up to World War II, and they go down and take Taiwan in 1900, 1901. So this is what's interesting, is that if you think about, no one in Taiwan has lived, even though it was part of China for 2,000 years, no one's lived under Chinese rule for 120 years. And having been there, it's a very interesting place because it's got a big China influence, it's got a Japanese influence, and it's got an American influence, right? So it's an interesting, ultimately, our view has always been, China plays the long game. That if you have the view the West is declining, that we're the best, then Taiwan should want to join, be part of China. Mm. And it's similarly, huge ties between the two countries economically. Mm-hmm. So that's where you just kind of say, listen, some of this stuff, and the one thing that was interesting, I saw Henry Kissinger speak about 2 months ago, and it was interesting, one thing that he brought up was, he was like, no one talks about, the D-Day beaches were 20 miles from the British shores. Taiwan's 100 miles. So you see them get on the boat, like, hey, we're coming over, like you got a long time. You see what these Turkish drones are doing to Russian tanks. You got 100 miles seeing them coming, like the logistics of that are really, no one's done an amphibious assault across 100 miles, right? So anyway, like I think it's a sensitive issue. It's a tough one, but you figure you do the mental math of after what you've seen, what happened to Russia, like what that happens. Global depression.
Yeah, I mean, first of all, fantastic history lesson. I mean, and that's the thing I said to Lakaya. Isn't it amazing that every single day on Twitter, if there is a macro tourist topic of the day, everybody has an opinion.
Yeah.
That's macro tourism.
Right.
There's no time series. There's no history. There's no context.
Yeah.
It's just good, bad,
right.
and polarization, right? So I do think that's like, again, I am short Taiwan because the growth data is slowing. Yeah. I'm not short Taiwan because I know that Xi is going to go October 23rd. We're going to announce I got 6 new guys.
Yeah.
We're gonna go 100 miles today. I mean, that's not the thing. Yeah. So I appreciate that. That's
well, I just think like listen, semis. Taiwan is a proxy for semis. Semis are cyclical.
Right.
They're going to roll over, right? Now that we're giving them all this money.
It's all this stuff is so fascinating, and I will never learn enough about what like China, Asia, all the interconnectedness. I think it's like the one topic where, when I'm on the wrong side of the grass, I just wouldn't have known enough.
Yeah.
But I do believe that the signal knows. Like that's how I kind of resolve it.
Yeah. Well, that's the process.
Yeah,
right?
That's a process. It is a process. It's at least for me, it helps me worry less about what I know. This is from Mick. I knew we were going to get this question about property. Brendan, what are your thoughts on the crash in Chinese property values and the reported large number of developer defaults, or is it fake news?
It's not fake news. On slide 13, so we got just and this is one of the big issues. You've got 2 issues. You got zero COVID, its effect on consumer confidence, and then you've got housing. Now, housing, there's 2 issues. China, 1980, 20% of people live in cities. Today, it's 70%. So you're talking about hundreds of millions of people have migrated from rural farming areas, high levels of poverty, into cities. And why is that? Because when you move into a city, you move into an apartment building, you get running water, you got a roof over your head, you got electricity, hopefully air conditioning, heat, proper sanitation, right? Huge effect on moving China up. But the downside was if these Chinese cities are getting bigger and bigger and bigger, then why wouldn't you just buy where the city's going to expand to? So it's like my mom's from Denver, and when I first flew into Stapleton as a little guy, you fly into Stapleton Airport right in downtown Denver is great, and then she went to University of Colorado, go Buffs, and we'd drive out to Boulder, and from Denver to Boulder is just farmland. Then they're like, we're going to put Denver International Airport out in the middle of nowhere. Like, the old mayor happened to own the land out there. But you're like, man, that airport is in the middle of nowhere, right? You go to Denver today, between Denver and Boulder is just one giant suburb.
Yeah.
The whole way. And you go out, you fly into Denver, you land, and the whole way into town, it's suburb the whole way in.
Yeah.
So that's like China, but across hundreds of cities, right? Where they just got bigger and bigger, and they went wider and wider and wider, right? And you see this happening in Texas, Florida, right? And so everyone who's invested in real estate in China has made money. So estimates vary. 30 to 60% of household wealth is in real estate, and that's a problem because that's a malinvestment, right? Like you want your money going into building semiconductor chips or biotech, trying to cure cancer, right? Going into a brick building. So one, the government has been saying, we want to disincentivize this. The other factor is if you go back a few years, after doing this for almost 10 years now, the laundry list of, the stuff thrown at you, if it's ghost cities or shadow banking, right? This is all the stuff that's going to blow up China. But again, job one for the Chinese government every day when they wake up is stability. Like, get in front of the problem, right? Western banks, central banks always, like, even right now, like, we're going to break stuff and then we'll stop, right? China's more of like, get in front of the first domino before it goes. Guess what? You avoid the crisis. You forget the headache. So, levered property developers like Evergrande, Country Garden, this new one, CIFI, will go away. They will pay for their sins. Won't exist. But they will be given the money to finish what they started. So they actually, there's some actually positive signs of like them supporting these developments from Evergrande, which again won't exist in 3 to 5 years. And the one thing that's interesting to me is like the sign, like one of the interesting things about when you get into index investing is like recently, you had tech was 25% of S&P 500, right? That was your cowbell almost, right? The sign of in the Asia high yield bond market, the index, the JP Morgan Asia Credit Index, 50% of the exposure was to Chinese high yield bond. And now it's 12. And I'm telling you, when an index, when you look at it, 1 year, and you go, when you have a catalyst, the asset classes cease to exist. Like in Asia, they've had to shut down all these mutual funds. We're like, oh my God, like there's nothing left to invest in, Keith. Like, that is like, to me, you mentioned someone like, I'm really interested in investing in Asia high yield bonds. Like, you get laughed out of the room, you get fired from your job. I'm like, that's when you buy. And, are these companies going to go away? Will they, but outright default, create, China's Lehman moment? I'll take the under.
What is the yield on the high yield ETF you guys have? Do you know?
KHYB is almost 10%.
Holy shit.
And I'm not saying like, listen, like we don't take grandma out of CDs. I'm just saying like, if you want a piece of a diversified fixed income portfolio, a little piece of KHYB, like, you're picking up 10%. Like, and guess what? These bonds all traded like cents on the dollar.
Is it risk free like Lunacoin was?
There's some hair. There's some hair on this. Like I'm not, you look at some of these names, you're gonna be like, you tell people like, but listen, man,
all the hair comes after all this happens, right? I mean, this is a global quad 4 recession. That's when you see the hairiest of hairy beings. I mean, it's definitely, I mean, I appreciate that. This is maybe, and this I don't like. This question. I have some thoughts on this too, but hi Brendan, how concerned are you about the current fragile state of global affairs, particularly between the U.S. and China? It seems like there's a lot of fourth turning stuff going on. You know what that fourth turning Neil Howe, our guy.
Real pick me up.
Well, fourth turning. I mean, first I'll let you respond, and then I'm going to say what I was going to say about that.
Okay. I mean, I think it's something we learned from the past administration was if you create a lot of rigmarole, like no one looks in the mirror, right? So you can look over here, not at what we're doing,
right?
And I think that lesson's been learned by a lot of politicians globally. That if you point the finger over there, people are like, oh yeah, that's it. Instead of saying like, are we getting an ROI on our votes or our tax dollars? Like,
isn't that partly why it's a bipartisan agreement, one of the very few in the country to be anti-China?
It's to me, what's interesting is like it's like there's a national defense element where I'm like, listen, like I'm for the national defense. Like there's no like, listen, like we're New Yorkers or I mean, when from your Connecticut, you're called tri-state area, right? Where if you're from Long Island, you're like, I'm from Long Island. Or you're Jersey. Connecticut, we're like, oh, we're tri-state. Like, listen, like I think it's incredible that we haven't had our military intelligence has prevented another 9/11. And I'm so grateful to all the people who serve. I also think we can do business with China. And I think instead of giving the middle finger to people, like it's diplomacy is hard. It's easy to break stuff, right? Like I remember when the Taliban blew up these like ancient artifacts in Afghanistan. We were like, man, it took people. Those things were around for thousands. It takes one stick of dynamite, right? So it's easy to break stuff, harder to build it. And I'd say our ROI on diplomacy. And it takes two to tango here, right? I'm not, this is in general. People, like get on an airplane, figure it out. Like the biggest joke to me is this like Thulicides trap that, China and the U.S. as a rising power versus the incumbent power. I'm like, wait, you're saying like 2022, this is like Carthage and Rome? Like the best argument you got is Sparta and Athens? Like,
well, if you look at the last 14 of them and you go back far enough and then you try to find the last one, that's the point of the book, right?
Yeah.
For those of you who haven't read the Harvard professor's book, but it's
who am I to
no, but it's an attractive narrative.
Oh, it's our brains, it's the lizard brain, right?
Yeah.
It's find the simple solution.
Well, this is what I was going to say about the fourth turning, and unfortunately we have to wrap up here. But it's the fourth turning, in as much as it is a problem between China and the U.S. and the U.S. and Europe and China, is a uniquely American problem. Like, if you really believe in the fourth turning, you're believing what you see everywhere. Like, all this stuff is getting royally fucked up, and everybody's like, oh, so just blame China? I mean, if it actually plays out politically in the U.S., the fourth turning, the way that it has, and again, Neil Howe doesn't go back to Thucydides' trap and go back to Sparta.
Yeah.
He goes back to, okay, this just happened in Japan, this just happened in Europe, we're next in line. I mean, it's really a uniquely American problem to America. It's a really uniquely Chinese problem to China. So to just always say that it should end in China against the USA, I think that like is far too.
Yeah.
I mean, I like to simplify the complex. That's too simple.
Yeah. Have you read the book Factfulness, Hans Rosling?
No.
So this guy, it's terrible. I mean, the poor guy died. But he wrote this great book, and it's about how good the world is. And what's interesting is he looks at it from like, this was written in like a few years ago, but it was like, this year versus last year versus a decade, 30 years, 50 years, 100 years, 1,000 years. Mm-hmm. So, what's interesting about this book is, and then he looks at he's like, I'm looking at this at every demographic level, like across the globe. So like extreme poverty does exist today, but extreme poverty today is so much better than 20 years ago, 50, 100, like we'd all be, I had appendicitis as a kid. I should be dead, if I wasn't, if I had just been born 40 years ago, right? Or 50 years ago. So this book is great because it's like, there's never been more literate people in the world ever. There's never been more people vaccinated. There's less people dying from cancer and everything. Like, the world has actually never been better than today. And I was just telling my wife, like, a year, our basement flooded like a year ago, and then, but we were talking to my wife about this, where she wants to renovate it. But I'm like, look, these poor folks, our fellow citizens down in Florida are dealing with this terrible. But guess what? Like, they're, things are going to get fixed, right? And that's kind of like this, where this book is so good, is because it's like, things are really, really good here, and in general in the world, and it might not feel like it. Terrible things in Ukraine right now, and hopefully, that resolves itself. But you kind of say like, the U.S. has it pretty good. China, like a lot of good things, globally.
Yeah, I would be very surprised. One, if I come up with the answer on where it all gets to in the next 1 to 3 months, but I'd be very surprised if, fourth turning or not, that the world just goes into their silos, and you don't have this, like you said. And I thought one of the more important slides was how interconnected we all are economically. I mean, that's a tough one to unglue all that. And by the way, if that's the bear case, first of all, I'm already short, pretty much everything. It is the end of the world case.
Yeah.
Yeah, and as you know it. And maybe that's kind of the climactic fourth turning that some people are looking for.
Well, the great pair trade of guns and gold, right?
Right. But it's I want to thank you, because it's like, for me, like every time I talk to you, I'm getting an education in a spot where, like I said, until I'm long gone, I'll still have work to do. And I know everybody can follow you now and know who you are. And now when I pop an ETF on the board, they probably knew where it came from. And nice job with everything that you guys have built so far.
Thank you. Great seeing you, Keith.
Awesome. Well, he's Brendan Ahern. We're both Irish. We're biased in that regard. Might have a cocktail after this. But again, thank you so much for spending the day with us again. That was day 2. We're going to wrap it up with day 3 tomorrow.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.